Good morning everybody, welcome back to Cilinix Crypto. Hope you're all doing great, hope you're having a great start of this week and welcome to this new video on Ethereum. In this video we'll talk about the technicals of Ethereum, which there is enough to talk about after the bullish momentum we got throughout the markets yesterday. And there's also enough to talk about regarding the fundamentals. Tomorrow is the Shanghai upgrade, and apart from that, tomorrow we'll also have the inflation rate numbers coming out in the afternoon. So it's going to be a very big day for Ethereum. A lot of price drivers happening all together. So I'll just give you my thoughts on that and my best analysis of what is possible to happen with the price of Ether in the next 24 hours. Which is 100% going to be very volatile. But before we get into Ether specifically, if you want to receive daily trading signals, check out the links down in the description or the pinned comment, and there you'll find instructions on how to join my trading signal group. So now let's get into Ethereum. So purely technically, I mean, we just received bullish momentum because of market circumstances. Sometimes because I think the expectations for the inflation rate are positive, are bullish for crypto. So sometimes you already get some of that momentum ahead of time, or in this case ahead of the event actually happening. So I think that's what happened. We got to our previous resistance level right here around 1920, 1940. Technically the level ranges from 1900 all the way up to 1940. So we're in the middle of that, which is actually fairly bullish. We're not under it. We actually have some decent support just below us. But now the big question is can we expect bullish momentum or bearish momentum? First of all, I do not expect that much more momentum coming from the inflation rate before it happens. And for tomorrow, I'll still do a full video on that tomorrow. But for tomorrow, the big thing is looking at the inflation rate year on year and seeing if it's higher or lower than the consensus. So higher or lower than the expected. If it's higher than expected, it's probably bearish. And we're probably going to drop down because I am also in the end expecting some bearish pressure coming from the Shanghai upgrade. And that's for two reasons. First of all, a lot of Ethereum rewards are being unstaked. All right, so that's a lot of potential selling pressure for Ethereum, but also a source of people being scared or people becoming scared. And apart from that, there's also the effect that sometimes happens when you have a buy the rumor, sell the news event, right? So with the merge as well, the month before the merge is bullish, and then once it actually happens, we drop down. So we were bullish ahead of the Shanghai upgrade right here. Perhaps now, once it has actually happened, we will drop down. So that's why I think that we can actually still become bullish with Ethereum. But only if the inflation rate tomorrow is actually lower than expected, so lower than 5.2. In that case, I think we can. I do not think we can do it before this, but in that case, I think we can break above 1940 and get up towards that 2000 and 2020 level. All right, but it's difficult to say because I would say that the inflation rate is the most important thing. Because I do not actually expect that much selling pressure from the Shanghai upgrade. The thing just is that when the inflation rate hasn't happened yet and the Shanghai upgrade happens, I think we'll experience some bearish momentum. I do not see how that could provide us with bullish momentum. So that's kind of the thing. I mean, if the inflation rate is great, if the outcome is good for crypto, then we're fine. And I do not think the Shanghai upgrade will destroy our bullish momentum coming from that. But if it isn't, if it's neutral or bearish, I do think we will drop down at least to 1820 and 1840 again. So as I said earlier, I'll do an update on this tomorrow as well. But for now, these are my takes. So thank you for watching. Take care today and bye.